Okay, so something really weird is happening in the bond market. During a major global conflict, one of the safest investments in the world is supposed to go up in value. But right now, it's doing the exact opposite. This is the bond paradox, and we're going to figure out exactly why it's happening. So here's the central puzzle, right? When the world gets messy and uncertain, investors are supposed to rush into the safety of government bonds. But that's just not what we're seeing this time. So why are these supposed safe investments actually losing value in the middle of a crisis? Let's break it down. This slide just lays it out perfectly. On the left, you've got the textbook scenario. A crisis hits, people want safety, so they buy bonds. That pushes bond prices up and brings the yields or interest rates down. But look at the right. That's our current reality. People are actually running from bonds, which makes their prices fall and their yields shoot up. It's completely backward. You can just imagine the head scratching on trading floors right now. This reaction is so unusual that the old playbook has basically been tossed out the window. It's forcing everyone to ask a new question. What does safety even mean in an environment like this? All right, so to really get to the bottom of this mystery, we have to go right to the source of all this uncertainty. And it all starts with a geopolitical conflict that's getting worse by the day and the energy shockwave it's sending across the entire globe. At the very heart of this whole thing is the escalating conflict between the U.S. and Iran. Now, this isn't some distant event we can just ignore. Its shockwaves are hitting global markets hard, and the epicenter of all of it is energy. And things are heating up fast. We're talking about attacks on embassies, we're seeing Israel launch strikes in Iran and Lebanon, and then Hezbollah firing missiles back. Every single one of these events just keeps piling on more and more risk. So, what's the first and most direct economic results of all this chaos? You guessed it, a massive spike in energy prices. And the numbers, well, they really tell the story here. Take a look at the U.S. benchmark, WTI crude. It has surged past $76 a barrel, and that's a price that makes absolutely everyone sit up and pay attention. And this isn't just a U.S. story. The international benchmark, Brent crude, has jumped to over $83 a barrel. This really shows you that this is a global price shock we're dealing with. But why are prices jumping so high so fast? Well, it all comes down to a direct threat against one of the most critical arteries for the entire world's oil supply. This is the Strait of Hormuz. A huge amount of the world's oil has to pass through this one narrow waterway every single day. And right now, it is at the absolute center of this conflict. And here is the critical threat. Iran is threatening to shut it down. Closing the Strait of Hormuz would essentially paralyze the global oil supply. And just the possibility of this choke point being blocked is enough to spark fears of a massive disruption and send prices through the roof. So all of this brings us right back to our paradox. The fear of an energy supply shock is leading to a much bigger, much more powerful fear that is completely rewriting the rules of the market. And that fear is inflation. This quote just nails the confusion perfectly. The old rules are broken. And the reason they're broken is because there's a new fear in town, and it's bigger than all the others. Okay, so let's do a quick refresher. What is inflation? It's the force that makes your money buy less tomorrow than it does today. Now, for something like a bond, which pays you a fixed interest rate, high inflation is a total disaster. It just eats away at the real value of the money you get back. And this right here, this is the key to the entire paradox. Right now, the fear of inflation, kicked off by those soaring energy prices, is completely overpowering that traditional flight to safety instinct. Investors are selling bonds, not because they aren't scared of the conflict, but because they're even more scared that inflation is going to destroy the value of their investment. And we can see this happening in the data. Look at the yields on U.S. Treasury bonds. They're rising across the board. When yields go up, it means investors are demanding higher interest payments. It's their way of saying, hey, I need you to pay me more to make up for the risk that future inflation is going to eat away at my returns. So, what does this all mean when you put it together? Let's distill this whole situation down into the key lesson. Here's the chain reaction in 4 simple steps. 1, a geopolitical conflict heats up. 2, that causes oil prices to spike. 3, that spike creates major fears about inflation. And 4, investors react by demanding higher yields on bonds. And boom, the old flight to safety rule gets flipped completely on its head. The bigger lesson here is all about the power of expectations. It's not just about what's happening right this second, but what investors think is going to happen next. And right now, the expectation of rising inflation is the single biggest force driving the entire bond market.
And this leaves us with a really critical question. If inflation can just come in and rewrite the rules this quickly, what really counts as a safe haven for investors today? The game is changing right before our very eyes.